President and Portfolio Manager with Canaccord Genuity. Rob, we're mentioning these growth forecasts revised higher, but I also suggested that, in many ways, the markets have kind of come around to that, right? I mean, that's part of the reason we got this huge repricing in the bond market, because growth was coming in a lot hotter than expected.
Yeah, growth has been driving this, and I'd also say stimulus, Anwar and Amber. Thank you for having me here. By the way, great to be here on a fantastic Tuesday morning. I think the growth numbers that we're seeing now, you mentioned market pricing it in. I would completely agree. We're seeing the markets at all-time highs, but remember, I think part of the other reason we're seeing the markets at all-time highs, it continues to be this stimulus story here that hasn't been played out, and I know it does tie directly or indirectly to growth. But the liquidity, the sheer volume of dollars, I've talked about it before, and a lot of people talk about it on your show as well. But the growth combined with the stimulus that is coming and that hasn't been reflected yet in any of the numbers, the macro numbers that are being reported, continue to push this market higher.
And so that goes right to the heart of the market issue. With the markets at all-time highs, how much room is there really to run? How much is priced in? It sounds like you're saying that, this is not the end game here. It's not fully baked in.
Yeah, I'm obviously smart enough to know that I don't know what'll happen short term, but you're right. I guess if you were to ask me my opinion on the short term here, I do think there are so many positive indicators still out there. We saw the job numbers last week. We saw the payroll data. We saw, the manufacturing numbers. There's so many positive indicators and that haven't really, so those are on the table. Those are being reflected, but we're talking about those trillions of dollars of stimulus that have not yet been reflected anywhere, in any of those macro numbers. And I do think that once those kind of start hitting next month and the month after, and in the next quarter, there's still a bit of juice here just on that pure basis alone, Amber. And I do think, it's a little short-sighted of me to think that the market isn't pricing that in fully yet. But I do think that there is a likelihood that just the momentum will keep that going. Buying will create more buying for a little period of time here for sure.
And, so much of the conversation has focused on, okay, so if we're going to get that growth and it's going to continue, it's not going to be last year's leaders. We're going to see a shift to value. And I wonder if that overlooks some of the fact that there still is momentum in tech. A stock like Facebook hasn't been thrown out. Far from it. It also hit new highs yesterday. And that, is considered to be, in the growth basket that's falling out of favor.
Yeah, I'm agnostic to the value versus growth kind of debate right now. We're kind of equal on value versus growth. I don't see one, and specifically the Canaccord research as well, we don't see one kind of overtaking the other by any stretch. In my opinion, is a little different than everyone who's throwing out all the growth. I do think, and I said this last time, I do think you need to continue to be in certain growth sectors. You definitely need to be in tech. You cannot avoid that. I said that last time, and I continue to say it. Like, take a look at Alphabet. Like, that's a stock that, if you would have stayed away from, or you mentioned Facebook, those large kind of tech, and I know they're not necessarily called tech now, but those growth names, if they're trading, if we're not talking about the 2 and 500 and 1,000 multiple stocks, those kind of large cap, high growth, high growth, extremely large cap stocks, I think it's really, really tough to stay away from that right now, Amber.
And yet there is a pivot, especially yesterday, you saw it in the action, a huge move into these so-called reopening stocks, the airlines, the cruise lines, the hotels, particularly in the US, were moving significantly higher. How do you think about, playing those? Has a lot of the easy money already been made? And do you make a difference between, the gains of Canadian airlines, for example, versus US airlines?
I absolutely do. I do think that, the Canadian airline space is a lot different than the US airline space. I'm a little jaded. I do have some bad memories of airline investing. And, there's a long track record in Canada of not really making a lot of money in the early, in the last 20, 30, 40 years, although I'm not that old, but my dad still tells me about those stories. Lately, Air Canada has rallied, to the $50, $60 number. And now, we're fell back and started to come back. I do think it's different than in the US. In the US, you have a different space, you have less political intervention, and you really have, I think, a pure market. And I do think if you look at some of the big names like Delta's come back, almost to its pre-pandemic high. If you look at Southwest, it's at its pre-pandemic high. And if you look at American Airlines, it hasn't even come close to its pre-pandemic high. So I think in the U.S., depending on what kind of play you want to do, because not all the reopening plays are the same in the airline space. And also, you talked about the casinos, you talked about the cruises, et cetera. You're right. Some easy money has been made there. But if you actually believe that we're going to get back to normal and we're going to do kind of domestic and international traveling and we're going to get back to spending our money, if you believe that there is no immediate third wave of COVID happening, if you believe that there's no shutdown, for sure there's still money to be made there.
And part of the reopening trade has also been financials, and the same questions apply there. Financials have had this tremendous run. Is all that good stuff, the reopening, the higher rates, this high excess capital that they're sitting on, has that all fully baked in, whether it's the bank stocks or even the life insurance companies?
Well, the life insurance, I think, are a tad different. And I do think that there is some room here. And even, if you look at the big, Manulife and Sun Life and Great West, they are all kind of at their pre-pandemic numbers. But the neat thing there is that, one, we've had three reasons I think I'm somewhat positive on life cos. Now, I'm not telling anyone to go out and blast everything in your portfolio and buy life cos by any stretch, but we're, slightly overweight them. One is the bond yields. Everyone knows that interest rates, our bond yields are good for life insurance companies. That's an obvious one. We do think there's a bit of room here in bond yields. Two is obviously the increase in premiums. This one's less talked about, Amber, but I do think that there's a really nice growth and premium growth for insurance companies. We're talking 5-6%, which is really nice, and it has been like that for a while. I think that should continue, which should prove to be good. And finally, the other one is the foreign investments. Foreign dollars coming into Canada have now been positive now, and that's typically a bullish sign. And where do you think those dollars are going to go? In Canada, they might go to energy, right? They might go to traditionals, but there's definitely going to be a chunk that's going to come in my backyard here in Winnipeg, home of the insurance companies, if you will. And I think that's going to spur some buying as well.